Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 19th of August 2020, and on Monday we published a video entitled Silver Jumps 3% in Early Trade. And yesterday we were going to produce a video entitled Gold Breaches $2,000 Again, but held off, and for good reason we believe. You see, yesterday afternoon, that's GMT plus 1 afternoon, gold actually rose to $2,015. And silver to $28.48. And again, we simply felt that this meant that prices had got a little ahead of their skis. We were anticipating a degree of consolidation, and Monday's rise, then followed by yesterday's, again told us that this was too fast, too soon. Now it appears now at 1600 GMT plus 1 that we were correct, though of course we still have an announcement by the FOMC shortly, and the jobs data to be announced tomorrow, both of which could be most impactful. The dollar index today has weakened earlier below into the early 92s, but has strengthened a little to 92.4. But housing data published yesterday was positive at nearly 1.5 million new housing starts in July, compared with just over 1.2 million previously reported. Now, as mentioned, we have today the FOMC minutes, which are already impacting gold and silver prices in anticipation before that announcement. But let's take a quick look at what Kitco had to say just over an hour or an hour and a half ago. Kitco News. Headline: Gold price sees healthy pullback ahead of FOMC minutes. By Niels Christiansen, Wednesday, August 19th, 2020. The gold market is starting to see some renewed selling pressure Wednesday as it manages to hold around the psychologically important $2,000 level. December gold futures last traded $2,001.40 an ounce, down 0.58% on the day. George Giro, Managing Director at RBC Wealth Management, said that investors could expect to see more volatility in the gold market as the trading activity normalizes after the months-long buying frenzy. The dollar is trying to stabilize, but buyers await dips in gold as none of the usual global worries have eased, he said. Analysts at Commerzbank said that they also see technical selling as a healthy consolidation for the precious metal. Investors appear to be taking profits following the steep $80 price rise since the start of the week, they said in a note Wednesday. Gold is not able to regain its record high from nearly 2 weeks ago quite so quickly, in other words. The fact that it is taking somewhat longer can only be healthy in terms of its future price performance. The selling pressure in gold comes as the US dollar appears to have found some support after falling to its lowest level in more than 2 years earlier in the week. The US dollar index last traded 92.35 points, up 0.15% on the day. The latest round of profit-taking in gold also comes as the S&P 500 pushed to new all-time highs. Some analysts have said that growing risk appetite could weigh on the precious metals market in the near term. However, analysts have said that the rally in equities could be a positive factor for gold in the long run. In a world of low interest rates, analysts have said that gold is an attractive risk hedge for equity markets. Even though the actual risk rally caps the short-term appetite in the yellow metal, the cheapening US dollar, soft US yields, and mounting inflationary worries remain supportive of a strong gold demand in term, said IPEC Oscar Deskeya, market strategist at Swiss Bank SA. Yet investors aren't sure whether the historical high prices are a good entry point for hedging their risk positions. Price retreats, however, should attract dip buyers. Some market analysts aren't ruling out further equity market gains in the near term, even as they urge investors to use some caution at current levels. Looking back at past instances when the benchmark index broke even following a bear market, the S&P 500 has historically added another 4.5% over the ensuing 6 months, with the next peak arriving after climbing 71% on average, said Han Tan, market analyst at FXTM. Still, this does not mean that US equities are now immune from further corrections or a new bear market. The lessons from 1989 and 2007 show that US equities can enter another bear market within 12 months, despite fully exiting the previous bear market. In other words, further gains are not a foregone conclusion, he added. Although there are expectations that gold has entered a consolidation phase around $2,000, many still aren't ruling out high prices in the near term. All eyes will be on the Federal Reserve this afternoon as the central bank releases the minutes from its July monetary policy meeting. Analysts and economists have said that any comments hinting at further monetary policy action to support the faltering economy will be positive for gold. Looking at the technical picture, analysts at City Index said that they are closely watching resistance at $2,015 an ounce. A close above 2015 would turn the technical outlook to positive and trigger an advance to the resistance levels at 2075 and 2140, the analyst said in a report on Tuesday. On the other hand, failing to stand above 2015 would continue the range trading and may return to the support level at $1,910. I shall repeat that last paragraph again because of its importance, at least from a technical point of view. A close above 2015 would turn the technical outlook to positive and trigger an advance to the resistance levels at 2075 and then 2140, the analyst said in a report on Tuesday. On the other hand, failing to stand above 2015 would continue the range trading and may return to the support level at $1,910. End of article. So, to be fair, that article seems to express quite well the current position. Now, we can already see that gold has dipped to $19.70 and silver to $27.40. And we shall soon see the reaction from the FOMC minutes, though we do suspect that they may dip a little more before that announcement. And then afterwards we will get a generally good idea of its future direction. Meanwhile, we'd like to know what you think. What will happen later today? Is this current level a good one for acquiring gold and silver, or are you waiting that a little bit longer? Do share your thoughts, they'd be most appreciated. And meanwhile, thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting, of course, that we update our Richard and Greg channel every few days, and we have a new video appearing on that tomorrow. So if you haven't caught up so far, please do so. Naturally, we shall be producing a follow-up video after the FOMC minutes have been announced, but that is more likely to be published tomorrow rather than later today. It's also worth finally mentioning that equity markets across the board, both in the United States and also in Europe, are up, broadly speaking, around 0.25%. So clearly, equity markets are anticipating even further stimulus in the weeks and months ahead. And in line with this equity rise, it's worth mentioning a headline literally just published by Bloomberg that Apple Inc. has just made Wall Street history when its 2020 stock surge pushed the market value past $2 trillion. The first time a US company has surpassed that level. Quoting them directly, shares of the iPhone maker rose as much as 1.3% to $468.09 in mid-morning trading. The stock has more than doubled off a March low, in a rally that has been driven by strong earnings results and optimism over its upcoming 5G iPhone. So there we have it. Gold and silver up generally, although dip back at the moment. Equity markets still rising, and Apple Inc. now the highest capitalized company ever in US history. Thank you for listening. Until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.